Welcome to Classic Value Investors and Microcap Explosions. This is Mariusz Skonieczny, and today we are talking about Adobe. Why is this a great business video series? So Adobe is a company with a ticker symbol ADBE, and I'm sure a lot of you have heard of it. Some of the most popular software product that it has is Acrobat Pro, the PDF software, Photoshop, Illustrator. InDesign is used. All of these, or Dreamweaver to build websites. I don't know all of them, but Adobe is a company that pioneered desktop publishing. It was founded in 1982. If we quickly look at the maximum stock price since the beginning, 28 cents. Over this time period, it was a 2000x, right? 2000x over the last 30 years or so. So if you invested $10,000 times 2000, that would have been worth $20 million. Fantastic business. Let's look at some of the metrics. If you look at the returns on equity, the last few years from 2016 to 2019, very good returns on equity. 16%, 21, 29, 29, almost 30. Return on assets, starting here, 9.5, 12, 15, 14. Not bad at all. When you look at the margins, they're just fantastic. 85%, 86, 86, 87, 85. Operating margins, 18, 25, 29, 31, 30. Net profit margin, 20%, 23, 28, 26. Now, if we go back to the stock price here, from about 2009, the stock hasn't really done much, but over the last few years, look how it exploded. And that kind of coincides with the metrics that we're seeing here. They weren't that great in 2013, 2014. They started getting better in 2015, and they got really good in 2017, 2018, and 2019. So that's actually about the same time that the stock price really started to take off. I mean, from 2015, the stock price went from 75 to now 460. So what happened here? Why did this company go from being average to absolutely fantastic? You see, this company has been around for a long time, okay? And some of these products here, like Photoshop, InDesign, then Dreamweaver, not all of them, but some of these programs here are an absolute must for the desktop publishing world, right? And designers or publishers literally cannot live without them. And what happened in 2012 was, prior to 2012, the company was simply selling the software like a one-time sale, and then it was charging people for upgrades and stuff like that. But it was very expensive to buy Adobe's products. And in 2012, the company made a transition. It wasn't like immediate, but at that time it made a transition to go from selling the product as a one-time sale to a software as a service, a business model, which meant charging people like a monthly fee instead of just charging them a one-time fee. And if you can see all of these here, like Acrobat Pro, $14.99 per month, Photoshop, $20.99 per month. So now, obviously, changing a business model is always painful, but a business model that's software as a service is a win-win for both parties, because a company like Adobe can get a monthly recurring revenue, which are very valuable. And for people that are using it, it is a win for them because they don't have to fork out $1,000 to buy it right away. They can just finance it through monthly payments, and then the software applications get updated on regular basis, and then they always have the newest version. But because it was a gradual change, that then in 2017 the option to purchase the software was completely discontinued. So now it is all software as a service. And after the transition happened, you could see that the metrics, return on equity, started to improve tremendously. And also because of this change, the company was able to sell more products and gain more customers. Let's take a look at the income statement over the number of years. So let's start with 2001. You can see that the company's revenues were 1.2 billion, and then they went down to 1.1 billion, and then about 1.3. So you can see that it wasn't really a growing company. I mean, especially during those three years, and then it grew a little bit to 1.7 billion, and then 2015 to 1.9 billion. Then 2006, 2.5 billion, then grew a little bit more. 2007, 3.1 billion. Then the following year, 3.5 billion, and then during the financial crisis, revenues declined to 2.9 billion, and then it resumed growth to 3.8 billion in revenues. Then 2011, it kept growing, 4.2, and then 2012, 4.4. So up to this point, it was mainly selling the product as a one-time thing. And then starting in 2013, you can see that the revenues dropped. So, I mean, obviously this was expected, and revenues didn't really go anywhere in 2014, and then in 2015 it started to show nice growth again. Revenues were 4.8 billion, and from that point the growth really started to take off. 5.8 billion. Look at this. 2017, 7.3 billion. Bam, again 2018, 9 billion. 2019, 11.1 billion. 2020, 12.9 billion. So obviously the transition to software as a service business model was hugely successful. And at first there was some skepticism, and even people in the community didn't want that change. But the company stuck with it, and obviously it turned out to be very successful, and the stock price reacted wonderfully to this. If we take a look at what the company does with the operating cash flow that it generates now, so we're looking at the cash flow from operations, net cash provided by operating activities. The most recent, 2020, $5.7 billion. How was this money spent? Well, this is the money that belongs to the shareholders. So to look at what the money was spent on, we look at cash flow from investing activities. And if you look at these, where did most of the money go? Well, right here, about 1 billion. What was it spent on? Oh, okay, it was a short-term investment. So that's pretty much just parking the money. Where is the biggest spend? Right here, $400 million. What is this? This is purchase of property and equipment. Okay, so this you can call it capex. Okay, now out of 5.7 billion, 400 million, which is less than 10%, is being spent on capex. Okay, this alone tells you that this is a pretty fantastic business, because they don't have to spend a lot of money on capex in as a percentage of the cash flow that's generated. And if you look at the other years too, almost 400 million was spent here, and the operating cash flow was 4.4 billion. Here 267 million was spent only in relation to 4 billion. So then we have to go to cash flow from financing activities to see where the rest of the money went. And what is the biggest outflow here? Well, the biggest outflow or significant outflow here is $3 billion, $2.7 billion prior year, and $2 billion. And what is this? Purchase of treasury stock. So in other words, they're buying back stock, and that reduces the number of shares outstanding. So that's pretty significant. 3 billion out of 5.7 was spent on buying back stock, and the company at the same time grew at a very pace rate. That is absolutely fantastic, because the revenue growth for Adobe is very capital light. They don't have to spend much money. And yes, you can see here there's another 3 billion, but that's repayment of debt. So that's, again, that also benefits shareholders. 3 billion was spent on buybacks, and 3 billion was spent on repayment of debt, but then here 3 billion was used to take on debt. So it just looks like that they are using the banks to finance their operations, and they immediately pay them back. So in summary, Adobe is an absolutely fantastic business, and it has a huge moat. Okay, it has a moat that's coming from more than one source. It has a very good brand recognition. Everybody knows about Adobe and its products in the industry, and even people outside of the industry know about it. There's huge switching costs. If you are a publisher, and if you are using Photoshop, the last thing you want is to switch to another program, because it takes you a lot of time to learn it. There is a learning curve, and if you were to switch to a competitor, you have to learn a new program. So the switching costs are significant. And there are even free versions of various different programs, and people are still not switching to freer versions because they're not techies. They're just trying to use Photoshop to create a logo, or adjust a photo, or use InDesign to lay out magazines. They're not technology people. They just want to use the program and get on with their life. I had someone in the past for my book to design my cover. I mean, the lady used InDesign to create a cover, and I'm sure she used Photoshop for some of the pictures. So what she charges to do one cover more than covers the cost of Photoshop for the entire year. So it's not a significant cost. And so therefore people are not so eager to just switch to someone else, or even use a free version. They don't. It's just not that expensive, especially when it comes to paying for it on a monthly basis. These are tools that make them productive, and and they're very popular. And also another mode or source of mode for Adobe is the network effect. As more people, eh, because these tools, these softwares are literally like a standard in the industry. So if let's say more people use Photoshop, then more others want to use Photoshop, because if, let's say they collaborate and they want to send files from one person to another, well, if the other person has Photoshop, then it makes it easy. But it's if they were to use, if a person were to use like a free software and then send it to someone else, well, that someone else might not have that software. So it's just easier to use Photoshop or any other of these programs here. And Adobe also has software for editing videos, kind of like what I'm doing. I'm editing videos. I don't use Adobe, but there is an Adobe version that I considered in the past. And once you have your software like I do, you don't want to mess around and learn a new one, learn all the features. So you just stick with what you have. And obviously, when it comes to the valuation, the market cap of Adobe is 220 million, no, 220 billion. And if you just look at from the point of view of a PE ratio, it's trading at about 40 times revenues. I would say that that's for a company like this, probably reasonably priced. It's not too crazy expensive. It's definitely not cheap, but it's reasonably priced. So this is it for this video. Thank you for watching and have a good day.